Welcome to our weekly Forex forecast, and this is for trading for the week of June 29th to July the 3rd, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So a couple of things to keep in mind before we go into what news is coming out this week. First of all, overall, the number of COVID-19 cases have been increasing. So as the number of cases increase, it creates a risk-off environment, or at least it creates a risk in the market. And investors in general don't like risk, so they want to avoid it. And as a result of that, we may see some selling coming into the market. We saw this on Friday. So just keep that in mind. If the uncertainty around coronavirus grows, that will be problematic. We have seen that China has been putting Beijing under lockdown. So that is not something we saw happen last time. So this is the second wave here. We have, so this one here, China puts 500,000 people in lockdown. So last time it was in other cities. This time Beijing is being impacted here. So we did see that several markets were closed, and then they closed the schools down, and then there were a whole lot of people who were put in lockdown, and now we are seeing that they are still continuing on with that. So that is concerning for the market. Another thing is, in the US, we have seen an increase in the number of coronavirus cases, and that's problematic as well because the jump is substantial, and we are likely to, if we see that continuing, that will be negative for the stock market as well. Third thing we need to keep in mind here is we are coming into month end. So this is a quarter end as well. What happens at quarter ends is that the pension funds, the large pension funds, they need to reallocate do reallocations in their portfolio. So pension funds are supposed to be more longer term, but they are required to have certain percentages in each asset classes. So lately we have seen the equities go up quite a bit, and which means that that the amount they would have in equity would be out of proportion with what they are supposed to have, the actual versus what the target they're supposed to maintain will be higher. And as a result of that, we may see them selling some stocks. So keep that in mind, which means it could cause a downward move in the stock market. And when the stock market starts to drop, we see that impact on Forex as well. So those are some of the things to bear in mind as we go into the week. Let's take a look at what's coming up in terms of the news here. So we have Bank of England Governor Bailey speaking. Now, just with UK as well, there were some news stories that came out said that there were a lot of people on the beaches, which means that it can create more cases down the road. So 2 weeks from now, we could see more cases come up. UK is just coming out of the lockdown, and if everybody's packed on the beaches, basically it can cause the spread of the virus. Question here from LT, will the pension funds do this on the same day? Well, technically they start reallocating stuff prior to the month end, but we generally tend to see the move kind of come into the month end. So so we're looking at 30th here. June 30th is when we may see a drop in the market. So just something to be aware of. So they don't have to do all of them on the one day, but what happens is it is the last day. So they probably would have been doing that leading up to it, and we have been seeing a drop in the market. Actually, another thing that I forgot to mention was last week we also heard from Navarro. I think it was last week or the week before. Anyways, so recently we heard that Navarro said that the trade deal with China is essentially done. And on Friday, we got comments from China saying that US may jeopardize the purchases according to the trade deal, which means something fishy is going on with that trade deal. And once the whole truth comes out, we're likely to see a market react negatively to that as well. If the trade deal is over, then market will see that as negative, because we did see that impact on the market as soon as that news came out. So just something to keep in mind. Okay, like I said, on Monday here, we have Bank of England, Governor Bailey speaking. Bank of England has kept the door open to negative interest rates at this point. So if we hear anything in that regard that is considered negative, we are likely to see pound drop. But if they say, oh, we're not going to do it at this point, we'll just wait and see what happens, or if they express any kind of positive sentiment in regards to the recovery in the economy, that will be positive for British pound. So anytime we have central bankers speaking, it can be important. So something to watch out here. We do have consumer confidence numbers here from UK. These are likely to come in higher than expected here. If they are really positive, that will be positive here for British pound. If they're below expectations, market is likely to ignore those numbers, because right now all the negative news and all the negative data is being impacted because, sorry, negative data is not having as much of an impact because we already expect it to be negative. So that won't make much of a difference. Now, PMI numbers out of China, these, if they come in below expectations, we could see a negative impact on the market because of these, because China is going back into lockdown. And that is going to, and if we see that numbers are not where they need to be, then we are likely to see a negative impact. And this will generally translate into negative impact on New Zealand dollar and Australian dollar as well. So if you're trading those two, it's important to keep an eye on that. And then on Tuesday, we have a whole bunch of data, a bunch of FOMC members speaking. Again, anytime we have FOMC members speaking, and of course, we have Fed Chair Powell speaking here as well, again, their comments can have an impact on the market. So just be aware of when they're speaking. Like I said, market will move based on how concerned or unconcerned they are in regards to the economy. We also have GDP numbers for Canada here. Canadian dollar has been lagging recently, and if this number is worse than expected here, we are likely to see a negative impact on Canadian dollar. And then we have Chicago PMI numbers. This is expected to go up because, of course, the economy's, the U.S. economy is opening up now. If this number is quite positive, it's higher than this, we could see a positive impact on the stock market, not so much on the US dollar, but on the stock market. And actually, US dollar may even go down as a result of that move into the equities market. And then on Wednesday here, we have a bunch of PMI numbers out of the Eurozone here. PMI numbers, as long as they meet the expectations or they're close to the expectations, will be good. If they are quite a bit above the expectations, that will be positive, and we're likely to see euro go up. Pound is likely to go up under those circumstances as well, with the PMI numbers over here. So lately, these data numbers have been coming out positive, and we have generally seen a positive impact for the currency with these numbers. Now, this week, we have ADP, or non-farm payroll overall. First, we'll see ADP. ADP is generally considered a precursor here. And if this number is positive, then the expectation is the non-farm payroll numbers will come in positive here as well. After all the cuts that we have seen in the recent months here, this is the first time we are looking to see an increase in the number of jobs. So if the number of jobs that are added is higher than this number, the 3 million here, in that case, stock market is likely to go up on the once this number is released. So just keep that in mind. So when stock market goes up, our yen crosses and Swiss franc crosses go up as well. So just keep that in mind, and we're likely to see market get quite positive with these positive numbers. Now, if they miss the mark a bit, I wouldn't expect too much of a negative impact on the markets. But if they come in like this, so instead of 3 million jobs being added, we see 3 million jobs being cut, that is likely to spook the stock market. Okay, so when the stock market gets spooked, of course, our Swiss franc crosses and yen crosses will drop, and US dollar crosses as well. And of course, on Thursday here, so non-farm payroll is actually, looks like it got moved up to Thursday instead of Friday because we are going into the long weekend, July 4th weekend. So these numbers will come in on Thursday. Again, like I said, if this actual non-farm payroll number is higher than this, that will be seen as a big positive by the stock market, and the crosses that I mentioned are likely to go up as a result. If the number is a little bit below expectations, again, I would not expect too much of a negative impact, but if it's negative, in the sense that we have job losses instead of job additions, that will be concerning for the market. But if it misses by a little bit, that will be fine as long as it's a positive number. We're likely to see stock market go up. So US dollar may not necessarily go up as a result of that, because if stock market starts going up, then our other yen crosses, Swiss franc crosses are likely to go up as well. And that is it on Friday here. It is holiday, July 4th, holiday for long weekend here for the US. That's why the numbers got pushed up onto Thursday there. And then there's more PMI numbers out of the Eurozone. The PMI numbers, these are basically purchasing managers index. Purchasing managers or PMI numbers are precursor to retail sales. So if these numbers are positive, that means retail sales will be positive, which means the GDP will be higher as well. So these numbers are very important generally. So if they come in above expectations, expect the stock market to be happy about that. All right, so let's go on to our charts here. We'll start off with our euro dollar here. So euro dollar, we've seen that market has essentially been trading in this a bit of a range here. So last week we saw that price went and retested the high from the previous week, hasn't really broken out of it in either direction. Now we do have two pins here, which suggests that price does not like this area, and we may see a drop here. So bias here is bearish for euro dollar. Now keep in mind though, if it does not, we are into support, price is into support here. If it does not break through the support, it can still go up higher to retest the previous high again. So that is a caution. So watch out for that. But once we see a drop, we may see price move down further. So especially if the stock market starts to drop, I will look for US dollar crosses to drop as well. So this one is looking bearish. Caution again would be the support at 1.1165. If it doesn't break, then we're going back up essentially. But for now, bias is bearish, and I'm looking for a drop here. Watch out for a bit of pullback here into 1.1250 potentially, and then a drop. So bearish bias for euro dollar. Pound dollar here, this one, we have a doji here as well. Market's been all over the place recently. It did go up before it dropped here. So now this is looking bearish. Yeah, lately markets just have been bizarre. Okay, so this is a doji. Again, we have a large pin on the top, shows a rejection of the previous level here. So bias here is a bearish as well. And in this case, looking for price to drop again. Watch out for a pullback, potentially into 1.2420 level, or maybe even into 1.2440 back into this area here. And then I'm looking for a drop back down towards 1.2080. So the first target is 1.2250 and then 1.2150. So bearish bias here for pound dollar. Aussie dollar here, this one has been trading in a range. So if you take a look at it over the last little while here, price has just been stuck in this area. Just like euro dollar, this one also went to retest the high there from last week. Hasn't really done much. It's just been range bound trading for Aussie as well for the last 2 weeks. Now, we do see a rejection from the high, which means we are likely to see a drop in this as well. So bias here is bearish as well. Potential pullback into 0.69, and then I would look for a drop back towards this 0.6650 level. And then if it goes through that, we're looking at 0.6570. Again, for this one as well, the support will be important, because if it does not break this support at 0.6770, we could see it go back up and stay range bound for this week as well. So that will be the risk. So watch out for that. But for now, bias is bearish for Aussie dollar as well. New Zealand dollar, this is similar. As we can see, a lot of these pairs were sideways last week. So with this one, again, price is into support. So if it does not break support, I would expect it to go back up towards the top of the range. This one has also been stuck in the range over the last 3-4 weeks here. So for it to continue lower, we need to see a break here. But bias is bearish, because as we can see, price has rejected the high, which suggests that we are likely to see a drop. So we have to see a drop through this for it to continue. But bearish bias, first target 0.6300 and then 0.6250. Bearish bias for this as well. Dollar CAD here, this one is looking bullish. Canadian dollar has not done that well recently. So, however, just keep in mind, although it did close up, but in this case, we have to, price is still into resistance. So same as what we saw with the other commodity currencies, New Zealand dollar and Australian dollar, we need to look for price to break through the resistance before it can move forward. And in terms of a pullback in this area, let's move out a bit here. Okay, so 1.3650 is the level I would mark down for a pullback, potential pullback, and then a further move up. Now it could drop a bit into 1.36 as well, so keep that in mind. But for now, I'm going to put it into 1.3650 because that will be my first pullback level. And then I'm looking for price to continue higher. 1.38 is the first target, and 1.3865 is the second target. And there was a question in regards to the pullback for New Zealand dollar. That would be 0.6450. All right, so let's move on to our euro pound here. Euro pound moved higher. As we can see, it broke out of this range that it had been trading in previously here. So it's out of that now. Target is to the upside here, bullish bias. Another thing we need to keep in mind in regards to the pound here that I forgot to mention, Brexit negotiations. So UK has said that the deadline does not need to be extended. They're not looking for an extension in terms of the deadline, which had to be done by June 30th. So because UK has said that no extension is needed, the focus will be on Brexit negotiations. So if we hear any kind of negative comments in regards to the negotiations not proceeding well, them not being able to come to an agreement, all of that would be negative for British pound. So just something to watch out for. But this is looking bullish in terms of a pullback here. I would watch out for this 0.9050 level. And then we're looking for a further move to the upside here. First target is into this support resistance level here, 0.9120 and then 0.9180. So bullish bias here for Euro Pound. Euro Swiss franc, we have a pin bar here. Bias is bearish. In terms of a pullback here, just need to zoom out a bit. Okay, so this is bearish as well. In terms of a pullback, I will look for 1.0680 area potentially, and then looking for a drop here. First target is 1.0670, and then we have essentially all the way into the bottom here. So 1.0600, 1.0570, 1.0500. Those are the levels that I'm watching, essentially looking for this one to come back down into the base here again. So bearish bias for Euro Swiss franc. Now, if you are trading Swiss franc, just keep in mind, Swiss National Bank is notorious for intervening in the market, which means that they will, when they see that their currency is getting quite strong, they tend to go and sell their currency in the market, which makes it go in the opposite direction. So just watch out for that from Swiss National Bank. Okay, pound Swiss franc, this is looking bearish as well. We have a nice bearish pin bar here. So looking for a further drop. Watch out for a pullback either into 1.1735 or a little bit higher into 1.1750. But bearish bias here as well. First target 1.1585 and 1.1435. So bearish bias for pound Swiss franc. Dollar Swiss franc here. This one has been a little sideways here. Now, one of the reasons for this is US dollar has been relatively strong, and so has Swiss franc. So bias here is neutral. If we see the stock market starts to drop, this is likely to drop with that as well. But I am neutral on this. It can go all the way into 0.9550. So watch out for that. But I'm basically expecting a sideways move here. So neutral bias here for dollar Swiss franc. Pound yen here, this one's looking bearish as well. Price did go all the way up there to test higher, but it is bearish. We see rejection. The pin shows rejection, which means we are likely to see a drop. Watch out for a pullback into 132.65, or it can go even higher into 133.20 level. So those are the two I would mark. Bias here is bearish, and then I'm looking for a drop. Again, it is into support, so we do need to see a break of the support before the move can continue. But basically, I'm looking, overall, the downtrend still is intact, so I'm looking for it to drop further. 130.80 is the first target, 129.35 is the second target. So bearish bias for pound yen. Euro yen here, this one has been more sideways here with the selling in British pound. Euro has held its own. So this one actually is looking neutral at this point. And so my bias here is neutral. What I would be looking for is if it holds below the high of this last week, then I am looking for a drop. But if the stock market starts to sell off, basically all the yen crosses become biased to the downside. So just keep that relationship with the stock market in place. Once the stock market starts to drop, this tends to drop as well. Although Bank of Japan also went and caused their currency to drop because they said that they'll be doing more quantitative easing anytime there's quantitative easing by a central bank. That is usually negative for the currency, and they ended up doing that last week because Again, they, instead of doing the intervention like Swiss National Bank does, Bank of Japan tends to move the market through verbal intervention. So they come and make comments that causes their currency to weaken. And this is why yen didn't do as well, even though the stock market dropped. So this one here, basically, I am looking for price to trade within the range. If it holds below the high, then I'm looking for a drop. Only if it goes through the support would I look for this one to go further. At this point, pound looks weaker. However, another thing to keep in mind is sometimes we see this type of interaction where they will hold one currency and move to another one, which means they will hold up euro and they will sell pound against it, and the next week they can flip that. So that's something to be aware of. Doesn't always happen, but just keep it in the back of your mind. Dollar yen here, this one has also been sideways. As we can see, it's been stuck in this little range for the last few weeks here. It does look a little bullish. Again, it will depend on the stock market. If it sells off, then we're likely to see this one sell off as well. For now though, a bias is neutral for this as well. We may see it go into 107.65, and only if it goes through would I look for the next here at 108. And then from there, we may see, it may go like that, and it may still come back down. So for now, my bias is neutral for dollar yen. So actually, there's a question here. Why is my chart showing May instead of June? Because the June hasn't ended. So it doesn't quite update the next month till that has ended. So it is in June, but when I do a weekly, it will just, like May is back here. So we are still continuing on with June, and then the rest of them will come up as the price moves. So it is the correct chart. All right, so this one here, New Zealand yen, this has been sideways here as well. We do see a pin into the resistance, which means this shows a rejection. But if you take a look at the daily, it hasn't done anything. This one has been stuck here in a weird range for the last 2 weeks. So this is what I was talking about. Trading recently has been almost circular because prices haven't really moved very much. We are stuck in this range here. Sorry, weekly is what I'm looking for. Okay, so as we can see, it has been range bound over the last 2 weeks. Bias right now is neutral for this. If the stock market sells off, I would expect this one to sell off as well. But if for some weird reason stock market starts to go higher, this is going to go higher with it as well. So for now, I am neutral here. What I'm going to watch out for again would be a bit of a pullback and then potentially a drop. But like I said, it can go in either direction. My main bias will still be a little bit more to the downside, but if it doesn't break the support, it's going back up again. So neutral bias here for New Zealand. If it breaks through the support here, then I'm looking for it to basically continue. This whole move to the upside could unwind, so watch out for that. But for now, neutral bias for New Zealand yen. CAD yen, this one has been weaker. Canadian dollar overall has been weaker lately. So this is looking bearish here. And in this case, potential pullback into 78.80, and then looking for a drop. First target is 77.20, and then 76.80. Again, watch out for the support here. This is strong support at 78. If it doesn't break, again, it can do one of these. But for now, bias is bearish for CAD yen. Okay, let's go and take a look at our commodities here, starting off with silver. As we can see, this has been trading in this weird range as well. And at this point, we have a completely neutral candle close here for silver. So in this case, I will look for a retest of the high. If it holds below, then I'm looking for price to drop, but we may end up seeing a sideways move here as well. For now, neutral bias here for silver. And our gold here, gold has done well. And gold is looking bullish right now. So we need to zoom out a bit to get some targets here. We are definitely looking bullish. Okay, so in terms of targets, we have 1786 and 1800 essentially. And in terms of pullbacks, watch out for this 1767-ish area. So bias here is bullish, basically looking for a move like that. Now it may drop a little bit lower too, so just watch out here. Okay, let's see, pullback level. Yeah, so it could go into 1757, 1760-ish area before it goes higher. So bullish bias here for gold. Oil here, oil has been going sideways. We see a rejection from the higher level. So looking for price to basically come back towards the bottom of the range now. So bias is bearish here. In terms of the pullback level here, watch out for 39.80 and then looking for a drop back down. First target here is 36.20 and then 34.65. So bearish bias for oil. And this is why the Canadian dollar hasn't done well this week, because oil has been dropping. So Canadian dollar is directly tied into oil because Canada is a big exporter of oil here. Okay, so copper here, copper has also been a little range bound here. We see price has gone into the high and it's off of the highs a little bit. So looking at the daily chart here, we see that price went and tested the high. It did close with a bit of a pin bar here. So we may see a move like that. So essentially, but within, still looks like it may stay within that range. So neutral bias here for copper. Now, if it does break through the resistance, then it's highly likely to go higher here into 2.69 level. For now though, first I'm looking for a range bound move before I look for it to go higher. So neutral bias here for copper. Bitcoin, I don't have the current charts or recently updated charts. My broker is closed on the weekend, so it doesn't show me the weekend price move. But based on this one is still trading in a range. It's been stuck in a range for 2 months now. So this one is still looking neutral to slightly bearish. We may see a move down into 85.50, but it is range bound. It doesn't really have a trend at this point. It's just stuck sideways. Looks like it's waiting for something to happen in the market to show us its hand. So for now, we may see a move towards 85.50. And we'll update this on Monday. So we'll take a look at it on the weekly call. Daily call, I should say. Okay, S&P 500, a large pin to the downside here. And if the concerns keep on growing, especially with the coronavirus, we are likely to see a further drop here. So bearish bias for S&P 500. And in terms of a pullback, we could get a shallow pullback into 30-ish level or a deeper pullback into 30-70-ish level, but it is looking bearish right now. And first target is 29.80 and then 29.30 here for S&P 500. So bearish it is. So a question about Bitcoin. Bitcoin is basically trying to find its feet. Before it was all the speculation in Bitcoin. The question is what drives Bitcoin? It depends. There are certain events that are related to the cryptos that will drive Bitcoin, but before it was all speculation. Now Bitcoin may start getting used as an inflation hedge. It's not quite there. So this is why Bitcoin, I think, is just trying to find its place in the wider asset classes, and hence is directionless at this point. So anytime it really moves is when there's Bitcoin news, and in the lack of Bitcoin news, it's just trying to find its place. Now there were a number of larger banks that came in and said, or hedge funds, I should say, that came and said that they're going to look at Bitcoin as an inflation hedge, kind of like gold, but it hasn't gotten there yet. But we'll see in the future if Bitcoin starts to act like gold. Now, it hasn't lost its value either. That was one of the concerns that people had, that with the market crash, Bitcoin basically would die off, but that's not the case. So it's holding its own. So it looks like it's here for the long term. And now it's going to, just like Forex found its place, it's going to find its place. But till then, there is no real drivers as such, except for crypto news and Bitcoin news that tend to drive it. But we shall see where it ends up in the long run. So here, S&P 500, like I said, 2980, 2930. So that's looking bearish. Nasdaq here as well. This is the as we can see here, market is starting to top off here. So watch out. Bias here is bearish as well. We may get a pullback potentially into 99.30-ish area, and then looking for a further drop here in terms of the target. 97.30 or even 96.50 is the first target, and then we're looking at 9,500 as the second target here for Nasdaq, but bearish bias for Nasdaq as well. Dow Jones, this is finally dropping as well. We have a big pin bar here, so bearish bias for this as well. And pullback, I would look into 25,270-ish area. And then, of course, looking for a drop here. So 24,800, then 24,500. So those will be the two targets. So bearish bias there. And then we have DAX here. DAX is also looking a little bearish, although it's been trading in this range for the last few weeks here. But big rejection from the high there. So looking for a drop, potential pullback into 12,180-ish area. So let's say 12,200, and then a drop here. First target would be 11,935, and then 11,720. And we may even see a drop back into this low here at 11,580. So bearish bias here for DAX. And FTSE as well, we have seen a drop, although it still seems to be stuck in this bit of a range. But I'm looking for a continuation to the downside. Keep in mind here, if price does not break below this support, it can go back up. But for now, neutral to bearish bias here, 60.35 and then 59.20 are the two targets to the downside. So bearish bias here for FTSE. And of course, we have here this is looking bearish as well. We see that price has rejected the high here, and now next target here will be to the downside. This is also into support, so watch out for that. It has to break below the support for it to continue. Otherwise, it can go back into the range like this. So this is an important area to watch out for. So next target here is 21,780, and then we're looking at 21,600 as the second target. So the question here is, how do you add the stocks and the rest of these to your charts? I usually go into the market watch here, and you will see these here. Now, I think there was another one. So there's some symbols that are hidden. So if you are not seeing it here on the in MT4, if you don't see it on the side here, they were hidden, and I don't quite recall what I had to do to unhide them. Oh, here, sorry. Okay, so go into view, go to symbol. So if you're not seeing, so if you look at my chart here, you will see all kinds of different things here. These are beyond our normal symbols. So you have different stock markets and everything else. So if you don't see that, go to view and go to, first look at your market watch, then go to symbols. So if you click on symbols here, these are the different, so you can, it will show you what your broker allows you to trade, because not all brokers will offer all of these. Some will have them, some won't. So Forex, of course, we have all these Forex pairs, but we also have, looks like this one will offer stocks as well, certain stocks you can, but then metals is your copper and silver and gold will be under the metals. And so basically have a look in there. Once you allow it to be seen, if you click on it, that means it will be seen and then it will get added to your market watch. I hope that helps. Yeah, so it will depend on the broker, whether the brokers will, what the brokers will allow. Now, though, more and more brokers are allowing cryptos and different asset classes, indices and stuff like that. So yeah, take a look at it first. First check under your, where I showed you essentially. All right, so we will wrap it up. We will wrap it up here. If you guys are interested in taking my course, please check it out. You can go to tradingwithvenus.com and click under courses. You'll be able to see what kind of courses I have. All right, so we'll wrap it up here. You guys have a wonderful trading week. Expect it to be a little bit more volatile than we have seen recently. So I will see you later, so I'll be back with the daily analysis tomorrow. Bye for now.